Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. This week we have prepared as usual weekly report, and this time it's really interesting because a lot of interesting information stands around current processes in the financial system in the United States and the global world, and a lot of interesting indicators have appeared in the recent few weeks which shed some light on the plan that Fed Reserve and United States Treasury have on accumulation of the liquidity. In general, we are living in really interesting times because actually I have put the link on some article in the conclusion part of the report, and I really advise you to read it. It's very small on the Yahoo Finance. So the author tells that we have to forget about any quantitative tightening. All this is bluffing. So they really would like to pump liquidity very soon, just because if previously they were saving banks, now they will have to save governments, and this task demands a lot of money. And when I'm actually trying to take it all together, the recent ETF files from the BlackRock, Fidelity, announcement of the digital currency from the banks, government digital currency, and recent statement concerning the quantitative easing, more or less it's becoming clear. So if, for instance, big banks know that it will be significant pump on liquidity, it is understandable why they set the files for ETFs, because all this liquidity sooner or later but will be in their assets under management. If this is really true, somehow they have to avoid the hyperinflation, because if it will be really big printing of the money, they are not stupid, they will have to do something. And I suspect that the introducing of the digital currency, it might be one of the tools that might be used to protect domestic economy and the markets from the impact of the inflation. Well, of course I'm not sure, we can't be sure with any suggestion, because we do not know, and I hope that in the actually nearest time we will get some clues, maybe hints that let us to understand what's going on. But I suspect that maybe these two currencies will fluctuate together, I mean remain in circulation, the Fed currency, United States dollar, and the new digital currency. So in keeping it simple, they use digital currency just for population or allies such as the AUKUS block, while all other paper money they will print enough just to pay out all the debt, and will use this in the foreign circulation just for other countries, China, and for all the others. So this also might be the solution of the really big debt burden. So all inflation will remain out in the paper dollars. At the same time, this market is too huge to, for example, China can't say that we will not use the United States dollar anymore, because all the Chinese economy is linked strongly on the demand of the United States in Europe. So of course it will be not as stupid as just explained, but the logic you got the core. So something is preparing, I suppose, and all this stuff we have discussed in report. Speaking about the short-term perspective, here is very interesting things is going on. Actually, if you remember, a few weeks ago, and actually last week as well, we have focused your attention on the moment that United States yields are not dropping. I mean the 10-year yields and higher. And it was curious, and now it's curious, just because if everybody suggests the Fed pivoting, if everybody thinks that the US economy is strong and we're coming to the end of the rate hike cycle, I would invest in buying the bonds with the high yield that stands right now, suggesting that rates should go lower. But this hasn't happened, and yields are rising. This tells that in reality, the expectations of the inflation and further Fed rate policy significantly different from market expectations. And that in turn leads us to conclusion that if rates are rising in the United States, it means that dollar should cost higher, because it's more significant interest is paid on this currency. Just by the carry trade balances, dollar is more attractive due to the higher interest rate. In the long term, in demand for United States dollar could rise. That's why the short-term appreciation of the euro currency and upward performance, it's great, but it seems that the last word in long-term bullish tendency United States dollar is not said yet. So everything could change very fast. That's what we have currently based on the statistics and information that we have from the other markets. In the shorter term, returning back to our trading plan, as you can see on the daily chart, market has confirmed our analysis. That's, we said that's probably it's definitely bullish context, and market should keep going higher. Now, following this logic, market has to proceed to the OP, which is around 112 area. By the way, this target is actually agrees with the strong vehicle resistance. If you will read analysis on vehicle chart, you will see what I'm talking about. And here we have to keep an eye on a few things on the daily chart in the next week. First of all, take a look that market start flirting with the MACD line. So you can see it stands at the eve of the crossing. So the first thing that we have to keep an eye on is the appearing of the bearish grower. So if it will appear, that will be additional risk factor. Hopefully, for the bulls at least, this will not happen. Second, market, based on this swing structure, should not make any significant pullbacks and has to keep going higher. Why? Because take a look at the structure. First extension, deep retracement. Another extension reaching on the first target, shallow retracement, which it should be after the minus COP, and that has to be extension to the OP. On this stage, when the retracement is already passed, it should not be another deep retracement. Market has to keep going higher. That's why if we will see that market just stuck here, start forming some curious performance swings, and especially if it will return it back down inside of the wedge pattern, all this stuff will be negative for the bullish context and could even lead to actually the breaking of the all bullish sentiment here if market will fail to proceed higher, because as you could see here, we already do not have any significant fib levels. All fib levels have been broken in this upper direction here until the top. Everything is clear. Even I would say next level stands only around 1250 so on the weekly chart. That's why even above the high here we do not have any significant resistance. The only resistance which is a temporal is overbought, but it stands as you could see at 1050, so there's pretty much room until it will be met. And we have to control how market will keep going higher. On the hourly chart, as this kind of the hand and shoulders have been completed, reaching the XOP, although the performance was really dramatic. Here we have missed with our 108.10 target, so ADP factor was not sufficient enough to push price for these lows and complete the 108.10. With this target we have missed a bit, but actually with all other performance based on the payrolls and completion of this hand and shoulders, which could become the starting point of the reversal, everything was really going nice. So you can see that's just ABCD has been completed in this one session, and now we're just watching for pullbacks. So we're watching for this level 109.35, and next one is 109.15 approximately, is conference support. That level stands in focus where market could show the pullback. I would say that this level is also worth of our attention, is just because market is not at overbought, so retracement might be just to the nearest support. We just will see. This level we probably will use for placing the stop below this. But first we need to see the nature how market will show this pullback. That's approximately what we intend to do on next week.